Hello everyone and welcome to the HyperNest podcast. During this podcast, we interview some of the craziest industry leaders in the Web3 industries, and also at the intersection today more between TradFi and let's say more DeFi. At least we're going to discuss about this topic, and we're going to discuss also about crypto payments. And I'm sure that in particular debit cards payment. I'm sure that Georgy is a super expert in that. But before we move forward with it and we jump straight into it, I would ask Georgy, that is a co-founder of Wirex, to introduce himself.
Hello, everyone, and thanks for having me, Alessio. I'm a co-founder of Wirex, and I deal with key partnerships, business development, and a little bit of firefighting here and there, as probably every single co-founder has to at some point. Unlike many people in the industry, I didn't really have a background, neither in finance, in TradFi, nor in IT. So it was all very new for me, apart from the fact that I have been in this since 2014, which makes all of us pretty much veterans in the space. Yeah, but before this, I can't remember if I told you before, I was working in a very different industry, in the freight aviation. So the only common term between the two industries is actually airdrop. My last project back was launching cargo flights into Antarctica, and we would have to land on ice to offload the plane. But when we had to go to really remote places where even ice runways were not available, we would have to open the ramp of the plane in the air and literally airdrop the cargo. So that was a proper airdrop, and no one could complain whether it was fair or unfair, because you got your supplies, right? That's a bit of an insight. And dived into this rabbit hole. We were studying at the business school with Dmitry, another founder. And yeah, at one point he told me about Bitcoin. I started reading into it, spent 2 weeks, day and night, and never came back.
Well, that's an amazing intro. I think a few people in the world can claim to have done real airdrop, right? So it's a super interesting, I think, part of of your background. Without further doing, let's jump into it. So let's have an overview of how TradFi and in a way DeFi are in a way converging. We have seen many things happening in the last period. For example, BlackRock launching built on chain, on Ethereum chain, and already reaching 300 million in TVL or more at this point. We have seen Visa about to launch a tokenization platform. We have seen PayPal launching a stablecoin by USD. Oh my God, at this point, it seems a little bit inevitable. But what's your take on that, Georgy? What do you think about it?
We're finally starting to see the results of all the hard work, probably, that not just us, but many builders in the space have been doing. We often joke between ourselves that when we just launched and Bitcoin fell to $200, right? We thought, okay, that's it, we're done, let's pack the stuff and go. Surprisingly, 9 years later, we're still alive. The company is still working, plenty of users, etc. And it just, all these developments that you mentioned about big players adopting the blockchain technology and cryptocurrencies in general, it just shows how big of a difference it is compared to when we were starting. So everyone has been talking about adoption, about mass adoption by customers or users, about adoption by large institutions. Just to give everyone a bit of an overview or an example how bad it was compared to where it's now. So now, as you mentioned, Visa is launching a tokenization platform. Visa, together with Wirex, is launching. We're launching together with Visa this first self-custodial cards with actual settlements and stable coins right behind the scenes. When we were starting, not only we had no way of even approaching Visa or talking to Visa or being even let through the door, we were working via an issuer who was not a direct issuer, who was, working with someone else. So an intermediary on an intermediary. And when we knew, I hope if Visa do hear this, they don't go after us, not 9 years later. But it was literally so we would get our card program approved without telling anyone there would be crypto involved, because our actual BIN sponsor, the company that was supporting us with issuing the card, the actual issuer, they were telling us this would never go through. So when we knew there would be an audit from the Visa processors or whoever looking at our website and evaluating our business model and giving the final approval that yes, the card program is a go or no go, they would tell us in advance, and we would literally remove every mention of not even crypto, Bitcoin, because it was pre-Ethereum, right? So there was just Bitcoin back then. We would remove it from the website, so we were not in crypto. And then as we got the approval, we would bring it back. So fake it till you make it, that bad, And now, not only we're talking directly, when we're announcing these new cool self-custodial cards, and when we did announce our principal membership with both MasterCard and Visa back in 2020, both those companies were supporting those announcements, if not making them ahead of us. So it just shows this evolution, right? From just being completely neglected and not even let through the door to now working in tandem and doing joint announcements and doing joint projects. So we've come a long way, really. So maybe it would have been a good idea just to buy Bitcoin and sit back and relax, but someone had to do this, convincing and building, and hopefully we have contributed at least a little bit to that.
I completely hear you. I completely see your point. When in 2016 I was meeting with a group of crypto guys, between weirdos, developers, degen, miners who were getting together. I don't think we would have ever, and it's also not so many years ago, we would have never expected that, right? I mean, neither probably in our wildest dreams we would have considered the possibility to having, I don't know, PayPal, working on their stable coining and bribing pools on Curve Finance and bribing pools on Camino. Say, really? This is actually the future that we are considering? I mean, there was not even DeFi at that point. So I think it's incredible. And I believe that what you're saying is completely true. So the connection between these two worlds and adoption is finally happening. And I don't know why many people don't see it, but I believe that you being, in the middle of this evolution, you feel, this change. As you said at the beginning, you need to hide from the website what you were doing, but now kind of Visa working with you, MasterCard working with you, it's obviously, a big change. Would you say that these somehow made the progression of Wirex easier? So meaning that now it's a little bit more recognized, this line of business.
Well, it's certainly easier to talk to Visa, MasterCard, various banking partners now than it was back then or even a few years ago. But it doesn't come easy at all, right? It's a result of 9 years of hard work. It's a result of us working very hard on growing our regulatory capital. It's not just getting a license once, and the industry is way past those days when you could come to any crypto conference and in the, just run into a booth that would sell those Estonian crypto licenses for $2,000-3,000, just off the shelf. We're nowhere near that, right? It's extremely complex, difficult, not just to obtain those licenses, but to maintain them, to pass those constant audits by regulators, by various banking partners here and there. A lot of our resources go towards that. As a result, yes, it's easier to talk to TradFi players, to big institutions. It's still not, a conversation of equals. There's still a lot of TradFi companies still don't want to work with crypto companies. we named some of the more progressive ones, but by far not all of them are like that. So it's still there's still a long way to go. And yeah, there are other challenges. So regulation is unfortunately not becoming any easier. It's only getting stricter and stricter, and we have to adjust and introduce various different new rules, new checks, comply here, comply there, something changing here, something there. Yeah, it on that side of things, it's somewhat easier, but it never gets too easy. We just can't sit back and relax, unfortunately. Would be nice.
I hope it will at some point. Tell us a little bit more about it. We have already had some beautiful conversation me and you over lunch, and you were telling me, on both sides, right? On the acquiring licenses, it was also very difficult, and you need to constantly deal with a mutating environment. You need to have a backup plan, secondary plan, and also on the compliance side, you have the world of compliance, the requirement of compliance. So they also evolve over time and therefore create different paradigm and new challenges. But during all this year, Wirex was able to stay there, to survive, and potentially to thrive. So how were you able to? How did you face and how did you deal with these two, let's say, complex and different challenges?
Yeah, on the regulatory side, we kind of made the choice earlier on, right? We realized that there were different ways to go, and a lot of companies went different ways. A lot of companies remained forever in the kind of gray, if not black area. We decided very early on that we want to move towards being a recognized player. We obtained our own e-money license in the UK back in 2018. That was super early. It was e-money license number 3 for crypto companies, the first two being Coinbase and Circle, the two kind of indisputable leaders in this space, right? It was not an obvious decision at the time. Quite likely, it led to us missing on a lot of opportunities. So we missed the ICO boom, for example. We never took part in it. Time will tell whether it was a wise decision or not. On the one hand, we would have never obtained an e-money license in 2018 if in 2017 we had gone and raised city money in the ICO, right? On the other hand, some people did, and then they used those funds. If they use those funds wisely, then there are some companies that reached quite good results. So it's never obvious, but once you're on this path, you're on it, right? And it's constant work day to day, but it helps open doors going forward.
Well, it reminds me a little bit, the dichotomy between two of the biggest exchange in the world, right? One being, I think, Binance, and the other one being Coinbase. And they made very different decisions. And I think one decided to expand very quickly, and they cut some corner, as far as I know. And the other one went full on compliance, and being very, very close also to the government to make sure that they were as compliant as possible. What would you say that the main decision of Wirex was exactly this one, right? So to play by the book and potentially sacrificing short-term gains, but to have a more long-term view of what could have been done.
Well, we might not have the wider vision and not the crystal ball definitely at the time, but when you make this kind of decisions, there's sometimes no turning back. So if we compare ourselves to those two, we definitely went the Coinbase way. Not as big as Coinbase clearly, but we think
not yet.
Not yet. In our own field, we're quite confident and quite strong, and still maintaining leadership. And Wirex card is definitely better by almost every parameter than Coinbase card even, right? And Binance card doesn't exist anymore. So
yeah. Yeah, absolutely. I want to touch briefly on one topic that there was during our that we touched during our lunch. It was for me super enlightening, and and it was a topic of compliance in general. And we were discussing about the complexity, of tracking potentially nefarious actor or evil actor, but mostly using the traditional banking system versus potentially evil actor, villain, but using more just on-chain system, right? And I think that in the world there is an enormous misconception. Like the biggest one is like that, doing things on chain, it's obviously more, I would say, it's more prone to criminality, and it's much simpler to do criminal activity on chain. But people that has been in the space for some time will definitely be, I guess, against it, this specific statement. And you, that you are an expert in, and Wirex, of course, that has to be an expert, in these. You also told me, of course, that is completely the opposite. Would you be able to articulate a little bit more, to expand a little bit more on this specific topic?
Firstly, I'm definitely not an expert in that side. We have a whole risk and compliance department, which is filled with experts who are much more knowledgeable than I am. But from the limited knowledge that I have, this notion of everything in crypto, everything on chain, just being, drugs and child abuse and all of that, it's such a simplistic and such an uneducated view of the world, right? People think that, yeah, Bitcoin, well, those days of Silk Road have gone, right? We're nowhere there anymore. Not only transactions are much more transparent on blockchain, as you know, not only there's a multitude of tools like Chainalysis, Elliptic, Crystal, CyberTrace, whatever, like a whole number of them used by both government agencies and private companies to track all the transactions. So although they are technically anonymous or rather pseudonymous, you can't necessarily link an on-chain address to a particular name. But as soon as someone tries to convert it to fiat, in most exchanges, in most OTC desks, there is KYC process, right? So it's entirely possible to link a name to an address using those tools. And even if people are being very smart about it, read about all those complex investigations by Chainalysis, etc., where in many cases investigators manage to get to the really bad criminals, right? Not just some, basic money mules or money launderers or whatever, but like really criminal cases. The only reason they managed to investigate those and get the bad guys is exactly because they were using crypto. And if they were not, that would have not been the case. So it's a giant misconception even there. And then if you look at the sheer numbers, that same player, Chainalysis, which is recognized by every single government in the world, right? Which is potentially, if is on the dark side, right? On the government side, not on the degen and true crypto fan side. Even they say that only about 1% of all crypto transactions are nefarious by volume. Compare that to all the offshore banking industry, right? To those fines that the likes of HSBC and other major banks pay. And God knows how many cases are there where they don't get caught and don't pay fines, right? So the volumes, even if we, look at the numbers and not consider the fact that those are on-chain transactions that are not traceable, just the sheer amount of money laundering, fraud, and all of that happening via traditional finance banking rails exceeds crypto by far, by a huge margin.
Absolutely. I mean, I will never, stop repeating this concept. I think it's so important, right? And at the same time, as we were discussing, paradoxically, it is even easier to track on-chain transaction versus someone using a convoluted scheme with a different offshore banking, right? Because at some point you just lose track of what's happening, in the banking system.
That's why, being in this business and being a representative of a regulated company in this space, we have to follow all the rules, the regulations. We are implementing travel rule, for example, that everyone talks about. But on the other hand, why does the industry even need it, right? It was created years ago for the industry, which is by definition intransparent. You don't need this 19th century rule for the 21st century technology. So, arguably that one is not such a great piece of regulation.
Yeah, I mean,
in other areas and be a lot more productive.
Yeah, that's also another funny thing in general. It's how, let's say, we are used to have privacy by default in the classical financial system. So it's not that even if you know my name potentially, or even if you know my IBAN, are you able to see my transaction? No, you can't, right? And that's it. It's
exactly
right. But but we are so concerned about privacy in the blockchain space, right? I mean, there is an enormous movement against privacy that we have seen it, a few things happening. What's your take on that? On this
privacy blockchain space, to be honest, because why would you want to have your day-to-day transactions be visible if it comes to that? So there's got to be the right balance there.
All right, changing a little bit gear. So you have been a little bit the OG of crypto debit card. I'm basically using it since it's available. So big also supporter myself. But now we have seen a lot of people coming in the space. So lately, if I remember correctly, there is Uniswap or EtherFi. Everyone is producing their cards. Why do you think that there is this strong movement of crypto debit cards, and how also Wirex is keeping his territory in a way? So how you are somehow producing new feature that compete with others?
It's a good question. It's not just EtherFi and not 1inch, and there's plenty.
A bunch.
Recently at Token 2049, like almost every second stand had something to do with crypto cards. Like you look at it and you think everyone is going to have one now. Well, firstly, one thing is to announce. Second thing is different thing is to actually launch. Right, in this industry, it's prone to making announcements quite often, right? And then wait for 2 years on the waiting list. That's one thing. I think in most of those cases, Wirex would actually not be a competitor, but rather the best partner for all of those projects launching cards. None of them, at least none I know of, is actually launching their own cards. It is one thing to make an announcement. Okay, MetaMask is launching a MasterCard. If you know even a little bit about it, if you look into the detail, it's not MetaMask launching a card, right? It's MetaMask branded card issued by a partner. Let's not name any names, but it's issued by a partner who actually is not a direct issuer, not a member of Visa or MasterCard yet, at least definitely not yet. They use another intermediary. So what's the value of the setup if, yes, there is this beautiful on-chain product, but there's at least two intermediaries between the self-custodial wallet and the user and the card and the actual card scheme, right? So that issue of too many intermediaries, too many links in the chain is still not resolved. And then when you're asking about differentiation, about competitive advantages, well, the main advantage is the nearly 10 now years of experience. even the mere fact that everyone wants to launch their own card, it shows how little people know and understand about it. Because, card business is not where you come and start making money. Money doesn't grow on trees in this case, right? It's very expensive, very complex, and most card companies actually lose money. Even us issuing cards in hundreds of thousands, that's not where we earn the money, right? A card in itself is a money losing product. It's a marketing hook. It's very important. It's very valuable for the end user because it fixes this notorious last mile problem, right? You can do whatever you want, earn your yield in DeFi, mine your Bitcoin, but in the end, you will need to bridge these funds into the real world to either spend them or send them to your bank account or do something, right? At least for now, until all of the world goes on chain and, we've got the unicorns and butterflies everywhere and the world is a beautiful place. For now, there's still this question of on and off ramps, and card is arguably the most convenient off ramp, but it's not necessarily a money-making product. So it's a hard business to be in, and we've seen this process of new card projects popping up like mushrooms after rain. It was happening in 2017. It was happening after. It's now happening again. Well, let's see where it goes. In the grand scheme of things, the number of all such cards is still tiny, right, compared to the size of the traditional finance industry and the number of just normal cards in circulation. So there's so much room to grow that there's enough room for everyone. But for players like EtherFi and others, it will take a lot of time, and it probably won't ever happen that a DeFi project can become a direct principal member of Visa and MasterCard for a number of reasons, right? Not because they can't introduce KYC, but it's a lot more than just introducing KYC. It took us many years to get there, and rather than have 2-3 intermediaries down the line, projects like this can work with us, and Visa is actually recommending Wirex to quite a lot of projects in the space because it's already the ready route. So I think it's more about cooperation than competition, at least the way we see.
Yeah. Well, thanks a lot for the deep overview about it. I think in general, I personally think that is a good thing, right? So it means that we are, as you said, getting crypto. You can use crypto to buy food, and sometimes people that don't know anything about the space come to me and say, okay, and I have Bitcoin and I have Ethereum and I have this. What can I do with it? And when I open my wallet and I show the card, I say, okay, do you see this? There are cryptocurrency inside, yeah. And when I pay directly with this. I will pay our coffee together. People look at me and their brain explode, and it is something that is very interesting. It's a reaction that is very interesting because we still don't consider that probably the majority of the world is not used to that. And if we see more adoption, it's actually a good thing also in the specific space. And I think it's a good thing having this connection between these two worlds, the more crypto assets, digital world, and the real world. That you buy coffee with it, you buy milk. I want to go there one step forward because there is another, I think, clear trend, or at least an emerging trend, let's say it in this way, of having crypto cards but connected to a self-custodial account, where in essence you can own your cryptocurrency in your MetaMask wallet or an EOA wallet or in a smart wallet, and then you can spend directly from there. We have seen Gnosis coming in the space with the Gnosis card and Gnosis Pay, and as far as I know, also Wirex is going in that specific direction. What do you think about this new trend, and what type of needs are we solving with this new type of card?
Well, firstly, yeah, us being on the inside and living in this world day in day out, yeah, we can call it a trend. If you look from a more macro perspective, it's probably so tiny that no one would even notice it, not to mention call it a trend. I think there was a post recently, a couple months ago, I can't remember, probably not Abeni, the travel rule provider, that mentioned that across all the players that issue like self-custodial or self-proclaimed self-custodial cards, it's like 7,500 users globally. Come on, is it really worth calling this a trend? On the one hand. On the other hand, depends on how you look, right? The big indicator and the big piece of proof for us that the trend on chain is not just buzzword is that if we look at balances, user balances on centralized exchanges, they've been going from historic low to historic low. So people, after all those things that happened to a couple of years ago with all the FTXs and other players that went out of business, taking user funds with them, there's a growing lack of trust, right? There's a bit of an inertia. People people freak out in the moment, then they continue, but then some understanding comes that, and people starting to remember, well, crypto was actually always about being your own bank, right? That's the whole concept of it, that you don't need an intermediary to manage your money for you, to hold it for you. You can do it yourself. So that trend is there. It certainly is not yet very easy, right? It's still somewhat clunky interface. Although both Gnosis ourselves launching Wirex Pay very soon, we want to make it as easy as possible. But it still doesn't remove the necessity of the user knowing what the self-custodial wallet is, right? So yes, it is important for a lot of people in the space, those who care about self-custody, but looking at our own user base, let's face it, 5%, maybe 8% of people don't really care. Some don't care, some don't understand the difference, right? And in many cases, you offer the users some perks and they're ready they don't care about self-custody anymore, right? So this new trend, this new product, it is certainly appealing for people like yourself who care about self-custody, who understand the difference between trusting your money to someone and not trusting, being dependent on a third party, or not being dependent on a third party. For the wide majority of people, they don't care. With the self-custodial product, there's less opportunities for monetization, because especially now in the higher interest rate environment, when all the money-losing neobanks and banks started suddenly being profitable, there are opportunities to monetize, right? When it's self-custodial, there's a lot less, right? The only way you can make money is on those exchange fees, and you make them too high, no one's going to use it. You make them too low, it's not going to pay for your very expensive card infrastructure, right? So there's a fine balance there. So, but we give people the option. If you want the perks, the cashbacks, the interest on your savings and all of that, feel free to use the custodial app, right? We're still a regulated financial institution. There's still no reason not to trust, right? We're not one of the shady exchanges or whatever self-proclaimed investment platforms that want your money. So that is a way to, the regulation is hard to follow, but it's a way to create trust, right? To make sure people have a reason to trust you. And for those who are philosophically against it, right, or don't trust even licensed institutions, or just are against being working with any bank or financial institution from the traditional world, feel free to use the self-custodial product, right? There's, of course, still KYC. There's simply no way around it. If someone offers you any